Hello there people, welcome back to a new video. This one is going to be breaking down a 19.5R trade which took place yesterday. Now, before people say, oh, you target 19.5R, etc., the way I trade utilizes runners, which means I will take some profits at a certain point in the position and then I will leave the rest of the position to run until I get a counter trend trade where I can increase my risk, okay? So what I'm going to do is quickly just break down the position from the start, from the way I saw it yesterday morning. So if I just remove all this analysis, we will go from the start. So like you saw in the previous video with the gold and the GU position, the third touch trend line has been really good recently for me and also historically. So I identified that price had made a touch here, a touch there, and I was expecting a third touch of this trend line to act as support. As well as the support on the trend line, I identified the EMA was pushing towards my entry area, and this also was a second reason why price may act at this area as support. If I then also draw my Fibonacci, what do we notice? The 78 Fibonacci is also in this area. So now I have three reasons why price should act as support at this area. When it comes to trading, guys, it's all about the confluences, and the confluences are reasons why a trade should take place. In terms of a TP1, the first area that I was looking at was actually this area here, simply due to the fact that price had historically acted as resistance quite a few times. So on the position, I did have a 6-pick stop loss. Target 1 was there at 3R. So meaning once 3R was hit, I closed half of the position. So then I banked 1.5% from the trade. And then I just leave a runner. So I don't have a fixed target. And that's just the way I trade. Because you imagine, let's just say this isn't what I would do, but let's just say you had a sell here. If you had a sell area here that you were interested in taking, something like that, what you could do with your open profits is risk the open profits on the counter sell and imagine. So you've risked 1%. This trade would be running, for argument's sake, 12.5R. You've got half of the position still running, which is 6%. So you technically could risk 6% on this position without actually having to risk any of your capital. And that's what runners do, and it's something I utilize with the members as well. And we obviously it's a good risk management strategy and a very good way to compound your account. So you could just imagine that was the case, and that's the reason why I leave runners. But as you can see with this trade, it has continued, if this works, to push up. So there's not really been any fundamentals or anything along those lines. It has just continued to push up. So you can see now price is starting to pull back. Why is price starting to pull back? Price has come up and retested the high up at the 1.6180 area, and then you're seeing some form of retracement, easy as that. So you can see on top of that, that when price comes up to the previous highs and the key levels, you can see price reacts. Look, you had a reaction there, you've had a reaction there. So something else to take into consideration as potential take profits and things like that. But that's the reason for the trade and the breakdown. As always, all links are in the description should you want to learn anything. And thank you very much, guys. I will see you in the